Based on the historical data and forecast, Bitcoin shows a downtrend, particularly evident in the recent price action and the projected prices for the next week. The RSI consistently dips below 50, indicating weakening momentum, and the forecast suggests further declines. The price is currently near the support level of $78,400. Considering this, I recommend a short position with an entry price of $79,100. A stop loss should be placed slightly above the recent high, at $80,600, to protect against a potential reversal. The initial target price should be set at $76,600, aligning with the forecast price on April 14, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently approaching the lower band, which often indicates an oversold condition, but the downtrend suggests caution. If the price bounces off the lower band and shows signs of stabilization, we could consider adjusting the target price to $76,000. However, given the bearish forecast, maintaining the initial target of $76,600 seems prudent. This portfolio prioritizes the forecast data and RSI signals, combining them for a high-probability short trade with a defined risk-reward ratio. Based on the historical data and forecast, Ethereum exhibits a clear downtrend, particularly evident in the recent price decline and the projected lower prices for the upcoming week. The RSI consistently remains below 50, with values frequently dipping into oversold territory, below 30, indicating significant selling pressure. The Bollinger Bands also corroborate this trend, with the price consistently nearing the lower band. Given this bearish outlook, I recommend a short selling strategy. We will initiate a short position at $1,640, placing a stop-loss order at $1,590 to mitigate potential losses if the price unexpectedly rebounds. Our target price for this short position is $1,410, aiming to capitalize on the anticipated downward movement. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, it indicates an oversold condition, suggesting a potential bounce. However, considering the overall downtrend, we will still prioritize the short position. The short position will be triggered at $1,640, with a stop loss at $1,590. If the price touches the lower Bollinger Band, it could signal a temporary bottom, but we will maintain the short position with a target price of $1,410. This combined approach, leveraging both trend analysis and indicator signals, aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP exhibits a clear downtrend. The price has been consistently declining from March 25 to April 7, and the forecast for April 8 to April 14 predicts further decreases. The support price remains steady at $0.503, while the resistance is at $2.09. The RSI consistently falls below 50, indicating a bearish momentum. Considering the RSI, when the price reaches $1.83, we should initiate a short position with a stop loss at $1.86 and a target price of $1.75. The Bollinger Bands also support this strategy, as the price is approaching the lower band, suggesting a potential for further decline. To maximize returns, I propose a portfolio combining RSI, Bollinger Bands, and support/resistance levels. Given the forecast, the most efficient strategy is to short XRP when the price reaches $1.91, placing a stop loss at $1.93 and setting a target price of $1.81. This strategy leverages the downward trend, the RSI indicating oversold conditions, and the price nearing the lower Bollinger Band. This approach provides a high probability of profit while mitigating risk with well-defined stop-loss and target levels. Based on the historical data and forecast, BNB shows a downtrend with decreasing RSI values and a forecast indicating further price decline. The RSI consistently dips below 50, reaching a low of 34.9 on April 7, 2025, signaling oversold conditions. The forecast prices continue to fall, suggesting a potential for further downside. Considering the support price of $532 and the forecast, I recommend a short selling strategy. Enter a short position at $563, setting a stop loss at $587, just above the resistance level. The initial target price is $532, aligning with the strong support level. To refine this strategy, I will incorporate the Bollinger Bands. The price has been trading below the upper band, reinforcing the downtrend. If the price retraces to the middle band around $609, it could be a potential entry point for a short position with a stop loss slightly above the upper band at $656 and a target price at $532. However, given the strong bearish momentum and forecast, the initial short position at $563 remains the primary recommendation. This portfolio prioritizes the RSI and forecast data for high returns, with the Bollinger Bands providing additional confirmation and risk management. Based on the historical data and forecast, Solana exhibits a clear downtrend. The price has consistently made lower lows, and the forecast indicates further declines, reaching as low as $96.9. The support level at $105 has been tested multiple times, suggesting it might hold, but the overall momentum is bearish. We will implement a short selling strategy. Entry price will be $107. The stop loss will be set slightly above the recent high at $118, placing it at $118 to protect against unexpected upward movements. The initial target price will be the next support level at $105, aiming for a quick profit of $2. To refine the strategy, we'll incorporate RSI and Bollinger Bands. The RSI has consistently been below 50, confirming the downtrend. When the RSI dips below 30, it signals an oversold condition, potentially offering a better entry point. The Bollinger Bands show that the price is currently trading near the lower band, which further supports the shorting position. If the price retraces to $105, we will initiate a short position at $105 with a stop loss at $110 and a target price of $99. This layered approach allows us to capitalize on the prevailing downtrend while mitigating risk with well-defined stop loss levels. Based on the historical data and forecast, Dogecoin exhibits a downtrend. The price has been consistently approaching the support level of $0.149, and the forecast indicates further decline. The RSI is consistently below 50, with values frequently dipping below 40, suggesting a prevailing bearish sentiment. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.156. The stop loss will be set at $0.16, just above the upper Bollinger Band, to protect against potential short-term reversals. The target price will be $0.136, aligning with the forecast low and providing a reasonable profit margin. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently trading within the bands, but the downward trend suggests the price may touch the lower band. If the price breaks below the lower Bollinger Band of $0.148, it will be a strong confirmation of the downtrend, and we will tighten the stop loss to $0.15. If the price reaches the target price of $0.136, we will take profit. This combined approach, utilizing both RSI and Bollinger Bands, aims to maximize returns while effectively managing risk. Based on the historical data and forecast, TRON shows a sideways trend with support at $0.222 and resistance at $0.232. The RSI fluctuates around the midpoint, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting a period of consolidation. Considering these factors, I recommend a range-bound trading strategy. We will initiate a long position when the price touches the support level of $0.222. Place a stop-loss order at $0.219 to limit potential losses. The target price for this trade will be the resistance level of $0.232. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 40 near the support level, it confirms an oversold condition, strengthening the buy signal. Similarly, if the price touches the lower Bollinger Band around $0.226, it further validates the entry. Upon entering the long position at $0.222, adjust the stop loss to $0.22. As the price approaches the upper Bollinger Band around $0.232, consider taking partial profits. The final target price remains $0.232, aiming to capture the full range-bound movement. This combined approach offers a balanced and potentially high-return investment strategy. Based on the historical data and forecast, Cardano shows a downtrend with increasing volatility. The RSI consistently stays below 50, indicating bearish momentum, with dips below 35 recently. The Bollinger Bands are widening, suggesting a potential for significant price swings. Considering the support level at $0.575 and the forecast predicting further decline, I recommend a short selling strategy. Enter a short position at $0.654, setting a stop loss at $0.683 just above the recent high of the Bollinger Bands to limit potential losses if the price reverses. The initial target price should be $0.575, aligning with the established support level. If the price breaks through the support level of $0.575 and continues to decline, a second target price can be set at $0.534, based on the forecast for April 14, 2025. This strategy combines technical indicators with price action and forecast data to maximize potential returns while managing risk. The RSI suggests the asset is oversold, but the overall trend is downward, making shorting the more profitable option. This portfolio prioritizes capital preservation and capitalizing on the predicted downtrend. Based on the historical data and forecast, Dogecoin shows a declining trend. The price has been fluctuating within a range, but the forecast indicates a continued downward movement. The RSI consistently falls below 50, nearing oversold territory, suggesting potential for a short-term bounce, but the overall momentum remains bearish. The Bollinger Bands show that the price is approaching the lower band, reinforcing the bearish outlook. Therefore, I recommend a short selling strategy with a focus on capitalizing on the downward trend. The entry price for this short position should be $3.36. Given the support level at $2.92, a stop loss should be set at $3.45 to limit potential losses if the price unexpectedly rebounds. The initial target price should be $3.05, aligning with the forecast and the lower Bollinger Band. If the price continues to decline, a second target price of $2.95 can be considered. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink demonstrates a clear downtrend. The price has been consistently declining from March 25, and the forecast for the next week predicts further drops, potentially reaching as low as $10.1. The support price is firmly established at $11.3, while the resistance is at $12.7. Considering the RSI consistently dips below 50, particularly reaching 31.4 on April 7, indicating an oversold condition, we'll implement a contrarian strategy. We will initiate a long position at $11.5, placing a stop-loss order at $10.7 to mitigate potential losses if the downtrend continues. Our target price will be $12.7, aiming to capitalize on a potential bounce from the support level. To refine this strategy, we'll integrate Bollinger Bands analysis. The price consistently trading near the lower Bollinger Band suggests a potential for a rebound. Therefore, we'll adjust our entry price slightly higher to $11.3, aligning with the established support and the lower Bollinger Band. The stop loss remains at $10.7, and the target price is set at $12.7. This combined strategy leverages the oversold RSI signal and the Bollinger Bands to maximize potential returns while minimizing risk. This portfolio is efficient because it combines the three strategies to achieve high returns. Based on the historical data and forecast, Trust Wallet is exhibiting a clear downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week projects further decreases. The support price of $0.709 has been tested repeatedly, while the resistance at $0.821 has proven difficult to breach. The RSI consistently falls below 50, indicating a weakening momentum. Considering these factors, I recommend a short selling strategy. Enter a short position at $0.75. Place a stop-loss order at $0.78 to protect against unexpected upward movements. Set a target price at $0.65, aiming to capitalize on the projected downtrend. To refine this strategy, we'll integrate Bollinger Bands and RSI signals. When the price touches the lower band of the Bollinger Bands and the RSI falls below 30, it confirms an oversold condition, strengthening the short selling opportunity. We'll also consider the forecast data. If the price breaks below $0.732, it is a good opportunity to enter a short position. The entry price will be $0.7. Set a stop-loss order at $0.73 and a target price at $0.6. This combined approach, leveraging both Bollinger Bands and RSI, provides a more robust and informed investment decision. Based on the historical data and forecast, TRON shows a declining trend. The price has been fluctuating within a range, but the forecast indicates a continued downward movement. The RSI consistently falls below 50, nearing oversold territory, suggesting potential for a short-term bounce, but the overall momentum remains bearish. The Bollinger Bands show that the price is approaching the lower band, reinforcing the bearish outlook. Therefore, I recommend a short selling strategy with a focus on capitalizing on the downward trend. The entry price for this short position should be $3.36. Given the support level at $2.92, a stop loss should be set at $3.45 to limit potential losses if the price unexpectedly rebounds. The initial target price should be $3.05, aligning with the forecast and the lower Bollinger Band. If the price continues to decline, a second target price of $2.95 can be considered. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Render has been in a downtrend, consistently hitting the support price of $2.78. The RSI indicates oversold conditions, with values frequently below 40, suggesting a potential bounce. However, the forecast for the next week predicts continued downward pressure, with prices ranging from $3.2 to $2.73. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. We will implement a strategy based on the RSI, Bollinger Bands, and support/resistance levels. My strategy involves waiting for a bounce from the support level of $2.78. When the RSI rises above 35 and the price touches the bottom of the Bollinger Bands, we will enter a long position at $2.82. The stop loss will be set slightly below the support at $2.74 to protect against a breakdown. The initial target price will be the resistance level of $3.4, aiming for a quick profit. If the price breaks through the resistance, we will adjust the target price to $3.73. This strategy combines RSI signals, Bollinger Bands confirmation, and key support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Maker shows a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates around 50, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a downward trend, with prices decreasing from $12.40 to $11.20 over the next week. Considering the support price of $12.20 and the decreasing forecast, I recommend a short position. The entry price will be $1,240, placing the stop loss slightly above the recent high of $1,350 at $1,370 to limit potential losses. The target price will be $1,130, aligning with the forecast and providing a reasonable profit margin. To refine this strategy, I will incorporate the Bollinger Bands. The price is currently near the center band, and the forecast suggests it will move towards the lower band. This reinforces the short position. Therefore, the final portfolio will be a short position with an entry price of $1,240, a stop loss at $1,370, and a target price of $1,130. This strategy combines the downward forecast with technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, EOS has shown volatility with an overall upward trend. The RSI indicates periods of both overbought and oversold conditions, suggesting potential for short-term corrections. The Bollinger Bands have widened recently, indicating increased volatility. Considering the current support price of $0.719 and the forecast prices hovering around $0.72 to $0.76, I recommend a long position strategy. We will enter a long position at $0.734, placing a stop-loss order at $0.719 to protect against potential downside. The initial target price will be $0.761, aiming to capitalize on the short-term upward momentum. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the price retraces to the bottom of the Bollinger Bands around $0.721 and the RSI falls below 30, we will enter a long position. The stop loss will be set just below the bottom of the Bollinger Bands at $0.71. If the price reaches the top of the Bollinger Bands around $0.76 or the RSI reaches 75, we will take partial profits and adjust the stop loss to break even. This dynamic approach allows us to adapt to changing market conditions and maximize potential returns while minimizing risk. The final target price will be $0.802, aligning with the previous resistance level. Based on the historical data and forecast, PENDLE shows a volatile trend with periods of consolidation and upward movement. The RSI fluctuates around the 60 mark, indicating neither strong overbought nor oversold conditions consistently. However, the recent dip to 46.6 on April 07th suggests a potential oversold opportunity. The Bollinger Bands have been widening, indicating increased volatility, and the price has recently tested the upper band. Considering the support at 2.64 and resistance at 3.55, and the forecast prices for the next week, I recommend a cautious long entry strategy. We will enter a long position at $2.84, placing a stop-loss order at $2.64, right at the support level to limit potential losses. Our initial target price will be $3.2, aiming to capture a portion of the recent upward momentum. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI drops below 20, indicating a strong oversold condition, we will consider a more aggressive long entry. Conversely, if the RSI reaches 80 or higher, we will consider exiting the position or tightening the stop loss. If the price touches the lower Bollinger Band, it would signal an oversold condition, reinforcing a long entry. If the price breaks above the upper Bollinger Band, it suggests a potential continuation of the uptrend, prompting us to raise the target price to $3.55, the resistance level. This dynamic approach allows us to adapt to changing market conditions and maximize potential returns while minimizing risk. Based on the historical data and forecast, Mantra shows a downtrend, particularly evident in the recent decline to $5.72 and the forecast predicting further drops to $5.81. The RSI consistently fluctuates, dipping below 40, indicating oversold conditions. Considering the Bollinger Bands, the price has been approaching the lower band, suggesting a potential bounce. Therefore, I recommend a contrarian strategy, anticipating a temporary rebound before the overall downtrend resumes. We will initiate a long position at $5.81, coinciding with the forecast low and a lower Bollinger Band. A stop loss should be placed at $5.75, just below the lower band, to limit potential losses if the downtrend continues. The target price will be set at $6.25, near the support level and a reasonable profit target given the expected rebound. To refine this strategy, we'll incorporate RSI signals. If the RSI reaches below 20, it will be a strong confirmation to enter a long position at $5.8. If the RSI reaches above 80, we will exit the position. The portfolio will prioritize the Bollinger Band strategy as the primary signal, with RSI serving as a confirmatory indicator. This combined approach balances the potential for quick gains with risk management, aiming for a high return on investment while mitigating potential losses in this volatile market. The final position will be long at $5.8 with a stop loss at $5.75 and a target price of $6.25. Based on the historical data and forecast, Curve Dow shows a downtrend with fluctuating volatility. The RSI consistently stays below 80, indicating no overbought conditions, but recently dipped below 40, suggesting an oversold condition. The Bollinger Bands have been widening, reflecting increased volatility. The forecast data projects a continuous decline, with prices hovering around $0.428 to $0.481. Given this, I recommend a contrarian strategy focusing on short-term rebounds within the downtrend. My investment strategy involves a tiered approach. First, when the RSI falls below 40, around $0.421, enter a long position. Set a stop loss at $0.40 to protect against further declines. A conservative target price is $0.459, aiming to capture a short-term bounce. If the price reaches $0.459, consider taking partial profits and moving the stop loss to break even. If the price continues to fall below the support price of $0.421, exit the position. This strategy prioritizes capitalizing on temporary upward movements while mitigating risk in a generally declining market. Based on the historical data and forecast, Hedera shows a downtrend. The price has been consistently moving downwards, with the forecast indicating further decline. The support price is consistently at $0.14, and the resistance is at $0.164, which suggests a limited upside potential in the short term. The RSI is mostly below 50, indicating a bearish momentum. The Bollinger Bands are also contracting, suggesting decreasing volatility and a potential continuation of the current trend. Therefore, a short position is recommended. My strategy is to short Hedera at $0.153. The stop loss should be set just above the resistance level at $0.164 to limit potential losses if the price unexpectedly reverses. The target price is set at the support level of $0.14, aiming to capitalize on the anticipated downtrend. This strategy combines technical indicators like RSI and Bollinger Bands with support and resistance levels to maximize potential returns while minimizing risk. This is a high-risk, high-reward strategy suitable for experienced traders. Based on the historical data and forecast, Bittensor shows a downtrend, especially considering the recent sharp decline to $183 and the projected prices below $200 for the next week. The RSI consistently hovers below 50, indicating a weakening momentum, with values frequently dipping below 40, suggesting potential oversold conditions. The Bollinger Bands also confirm this trend, with the price consistently nearing the lower band. Therefore, a short selling strategy is recommended. We will enter a short position at $191, placing a stop-loss order at $204 to limit potential losses if the price unexpectedly rebounds. The initial target price will be $171, aligning with the forecast and the lower Bollinger Band. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI reaches an oversold level below 30, we will consider covering our short position. Conversely, if the price breaks above the upper Bollinger Band, we will immediately close the position and re-evaluate the market. The predicted price movement based on the forecast data suggests a continuous decline, supporting the short-selling approach. The portfolio will prioritize the short-selling strategy with a focus on risk management by setting a stop-loss order at $204 and an initial target price of $171. The strategy will be adjusted based on the RSI and Bollinger Band signals to maximize returns while minimizing risk.